challenges that I've outlined will be addressed against an economic backdrop highlighted by significant uncertainty. For a more complete look at cotton's economic situation, I would like to ask Dr. Jody Campeachy to set the stage for the coming year as she provides the much anticipated Economic Outlook and Planning Intentions survey results.
Good morning. It's really great to see all of you here on a Sunday morning to listen to some economic numbers. So I hope you have your coffee ready. So I want to thank you for the opportunity to present the National Cotton Council's Economic Outlook for U.S. and international cotton markets. So while the presentation will focus on a few highlights, a summary document will be available at the end of the session, and the full report will be available on our website. So while inflation has slowed in 2023, the macroeconomic projections call for economic growth to continue over the next 2 years, but at lower rates than in 2022. Both factors will likely impact cotton consumption. Now on the supply side, cotton prices have declined from year-ago levels, while production costs remain elevated, resulting in difficult economic decisions for growers in 2023. I will begin with a review of the current demand situation and then discuss projections for the 2023 marketing year. So during the second half of 2022, the prospects for cotton have become more pessimistic as USDA's estimate of 2022 world consumption has declined from almost 122 million bales in May of last year to 110.7 million bales earlier this month. With the exception of China, USDA has projected lower consumption for all major cotton-consuming countries in 2022. The largest decline in bales consumed is actually in India, with a 2.5 million bale reduction. Now, on a percentage basis, the largest decline in consumption is in Indonesia, with about a 23% reduction, and then Pakistan with an 18% reduction. So factors contributing to the decline in global cotton demand in 2022 include declining global economic conditions, high inflation levels, foreign currency issues, and lower profit margins for spinning mills. Now, the decline in demand is also evident in the monthly consumption estimates for U.S. mills. U.S. consumption is projected to decline to 2.1 million bales in 2022 as compared to 2.6 million in 2021. So looking at the macroeconomic situation in more detail, U.S. consumers have had some relief from high prices as inflation has slowed. Now, although prices remain at elevated levels, inflation is expected to continue to slow throughout 2023. Lower inflation increases consumer purchasing power as well as consumer sentiment toward the overall economy. Now, there is a strong correlation between consumer sentiment and gasoline prices. In January, the U.S. Consumer Sentiment Index reached a 13-month high, while gasoline prices reached a 15-month low. Modest economic growth is projected for the next few years. Now, the International Monetary Fund has projected a global growth rate of 2.9% in 2023 and a 3.1% rate in 2024. However, the projected growth rate represents a slowdown from 2021 and 2022. So this chart shows current shipments and outstanding sales to our top export markets. So as you can see, the top 3 export markets in 2022 are China, Pakistan, and Turkey. Now, based on different situations in each of our top 3 export markets, outstanding shipments as well as sales of U.S. cotton could be impacted in 2023. Now, although the extent of the impact is unknown at this time, it is likely that Turkey's consumption will be reduced in the coming months. And our thoughts and prayers go out to all of those impacted by the devastating earthquakes. China's current U.S. sales commitment level of 2.1 million bales is almost 2 million bales lower than at the same time last year. China has increased purchases of U.S. cotton in recent weeks, but continued political tensions between the U.S. and China including those related to the forced labor issues, remain a concern. The impacts of the Uyghur Forced Labor Prevention Act are evident when looking at U.S. imports of cotton, textile, and apparel products. The data shows a decline in China's share over the past 6 years. Now, in the earlier years, the large decline is attributed to the U.S.-China trade dispute. In 2022, the decline can be attributed to concerns about forced labor, as well as COVID-19 shutdowns in China. For 2023, a continued decline in China's share is projected. Now, in Pakistan, the ability to purchase imported goods is limited due to the low foreign currency reserves, and fulfillment of current export sales commitments is unclear. So based on the latest USDA projections, Pakistan is expected to consume 8.8 million bales in 2022, which is the lowest level in over 20 years. Along with the weaker demand, Pakistan's consumption is also constrained by available supply as well as the domestic price of cotton. Pakistan's domestic production estimate of 3.9 million bales is the lowest level in almost 40 years. So with lower domestic supplies, Pakistan has had to rely more on imported cotton. For the 2022 crop year, Pakistan is projected to import 4.5 million bales of cotton. USDA reduced Pakistan's import projection in February by 500,000 bales due to a depreciating rupee. As compared to the same time last year, the rupee has declined by almost 40% relative to the US dollar. The state bank's foreign exchange reserves are over 80% lower than a year ago. The stronger US dollar has increased the price of imported cotton, and the large reduction in foreign exchange reserves has caused the state bank to ration the release of US dollars. As a result, it is now more difficult for importers to open letters of credit to secure imported cotton. Now, along with the concerns in Pakistan, reductions in foreign reserves are also evident in countries such as Bangladesh, leading to concerns that they could also face challenges when importing cotton. However, as compared to Pakistan, the potential number of bales at risk is lower. So historical data shows a strong correlation between cotton consumption and economic growth, or GDP. Historical data also shows a large recovery in consumption in the year following a large decline. Now, despite these short-term challenges, the overall outlook for world cotton demand for the 2023 marketing year takes on a more positive tone, with the expectation of lower inflation in the latter half of the year and continued global growth. So for 2023, world consumption is projected to increase by 4.7% to just over 116 million bales. Cotton consumption is projected to increase in most cotton-consuming countries. Now we will turn our attention to the supply side, which I know you're all waiting ever so patiently for. So the 2023 survey was distributed in mid-December with responses collected through mid-January. Respondents were asked to provide their plantings of cotton, corn, soybeans, wheat, and other crops for 2022 and intended acreage for 2023. Now, as always, the survey results should be viewed as a measure of grower intentions prevailing at the time the survey was conducted. So looking ahead to the 2023 marketing year, production costs remain elevated and are only slightly lower than a year ago. According to USDA ERS, U.S. cotton production costs increased by $161 per acre from 2018 to 2022. Now, with an average yield of about 800 pounds per acre, this increase equates to about 20 cents per pound. Cotton producers will face difficult economic conditions in 2023 with lower cotton prices and high production costs. So relative to the average futures prices in the first quarter of 2022, cotton prices during the 2023 survey period were down by almost 20%, while corn and soybean prices were almost unchanged. In 2022, the January to March average futures prices for cotton, corn, and soybeans were $1.02 per pound, $6.03 per bushel, and $14.09 per bushel. During the 2023 survey period, the average futures prices for cotton, corn, and soybeans was 82 cents per pound, $5.95 per bushel, and $13.94 per bushel. The cotton to corn and cotton to soybean price ratios are at the lowest level since the 2009 marketing year. Now, historical data over the past 10 years has shown a clear relationship between the price ratios and changes in cotton acreage. Higher wheat prices have also resulted in a large increase in U.S. winter wheat plantings for the 2023 harvest season. So a review of the Council survey will begin with a look at the Southeast. Southeast respondents indicate a 9.5% decline in cotton acreage to 2.4 million acres. Acreage is expected to decline in all states. According to the survey responses, the expected decline in cotton acres is due to an increase in corn, soybeans, wheat, and peanuts. Mid-South growers intend to plant 1.7 million acres, a decline of 16.2% from the previous year. So across the regions, all states intend to decrease cotton acreage, with the survey indicating a shift to corn, soybeans, wheat, and other crops. 3 of the states showed double-digit percentage declines, with the largest decline in Mississippi. Southwest growers intend to decrease cotton acreage by 19.6% to just under 7 million acres. Kansas growers expect a slight increase in cotton acres, while Oklahoma and Texas respondents indicate a decline in cotton acres. Respondents indicated a shift to corn, sorghum, and wheat. So with intentions of 115,000 acres, producers in the West expect to plant 33.7% less acres of upland cotton. Upland acreage is expected to decline in all states in the region. Water constraints continue to impact planting decisions in the West. A slight increase in ELS acreage is expected for 2023. An increase is expected in Arizona, New Mexico, and Texas, and a decline is expected in California. So overall, the impacts of weaker relative prices and high production costs are evident as U.S. cotton producers intend to plant 11.4 million cotton acres this spring. This is down 17% from 2022. Upland intentions are 11.2 million acres, down 17.3% from 2022, while ELS intentions of 184,000 acres represents 0.5% increase. So planted acreage is just one of the factors that will determine supplies of cotton and cottonseed. Ultimately, weather events, insect pressures, and agronomic conditions play a significant role in determining crop size. So since the NCC Economic Outlook does not attempt to forecast weather patterns, the standard convention is to assume yields in line with recent trends and abandonment consistent with historical averages. However, looking at the latest U.S. Drought Monitor map, Texas abandonment is assumed at higher than average levels in 2023. From this map, you can see that drought conditions in the Southwest are not quite as severe as last year, but conditions are still very dry. Water availability in the West will also play an important role in final acreage numbers for 2023. So based on these assumptions for abandonment and yields, 2023 harvested acres is estimated to be 8.8 million, with an overall abandonment rate of 22.6%. So U.S. production is estimated to be 15.7 million bales with an average yield of 853 pounds per acre, which includes 15.2 million upland bales and 466,000 ELS bales. Now, it is important to note that if drought conditions continue in the Southwest, abandonment rates would be higher than the level assumed for this outlook, resulting in a lower production estimate. So now we'll turn our attention to the U.S. and world balance sheets. For the current marketing year, the NCC's U.S. export projection of 11.8 million bales is lower than the latest USDA estimate. This is due to the short-term challenges mentioned earlier, and shipments for the remainder of this marketing year could be further reduced. As we look at the balance sheet for 2023, the U.S. production estimate of 15.7 million bales is 1 million bales higher than last year due to a larger number of harvested acres. Based on recent seed-to-lint ratios, cotton seed production is estimated at 4.8 million tons for 2023. U.S. mill use is projected to increase to 2.3 million bales for the 2023 marketing year. The projected increase in world consumption, along with a larger U.S. supply, results in a larger U.S. export projection of 12.5 million bales for the 2023 marketing year. World production is estimated to increase in 2023 due to an increase in harvested acres. As I mentioned earlier, world mill use is projected to increase by 4.7% or 6.1 million bales in 2023. So with expanded consumption in key importing countries, world trade is projected to increase in 2023. Ending stocks are projected to decline slightly in the 2023 marketing year, resulting in a stocks-to-use ratio of 78%. As with any outlook, there are a number of risks and uncertainties shaping the projections. So on the supply side, producers may experience additional production challenges due to high input costs, lower cotton prices, as well as weather conditions. On the demand side, continued impacts of tighter monetary policy, high inflation, the Russia-Ukraine war, COVID-19 health impacts, geopolitical tensions, foreign currency issues, and slower economic growth have the potential to dampen cotton demand and put downward pressure on cotton prices in 2023. Mr. Chairman, that concludes my report.